my distinguished panel here, and let me introduce Mr. Abdullah Muhaikel, who is the co-founder of Rain Financial, Mr. Bart Brands, President of the European Blockchain Foundation, Mr. Leon Smith, CEO of DEX, and Mr. Sergey Vostrikov, Manager, Memorandum Capital. So welcome and thank you. And to start off, I think, let me ask you, Sergey, how would you differentiate security tokens, cryptocurrencies, or utility token, basically the basket of digital assets? Would you start by telling us what differentiates one from the other?
So just for the beginning, many people and many investors, they, let's say, don't differentiate utility tokens and security tokens. And still there is a strong discussions about this kind of new investment tool. So basically, utility token is just an artificial invention of those people who wanted to raise fast and basically free money, while security token is a new kind of investment tool, and it's, let's say, a revolution. We hope to have it a revolution in financial world. So utility token has, let's say, very few examples of real implementation in the apps or in the projects which raised money through ICO, while security token is a new paradigm in the financial market.
And from a regulatory point of view, how does, and to you, but how does the regulators view security tokens or digital assets in general? What are the perspectives on this, or where do we stand?
Well, I would like to go back to what the first speaker, Mr. Osman Sultan, said. He said that while we are at a paradigm shift, there is no, I'm not sure if he said it quite that way, but there is no length to the imagination of what can happen. Well, of course, regulators are trying to imagine what needs to happen. And he also said that there is a need for a new set of rules. And regulators are trying to make the rules while also being confronted with a reality that is fast approaching or even already exceeded their imaginations. So if we talk from a regulatory standpoint about where regulators are right now, well, they're thinking. They're trying stuff. They're trying to implement different sorts of regulations. In Europe specifically, we have a couple countries and of course the European Union all vying for and trying to find out what the best regulatory framework might be right now. But to quote from the last FINMA report that was released a couple days ago, I do love the way the Swiss approach the question of regulatory, the challenges of regulators, is that they use a principle-based regulation. So they're not trying to compete with the technology. They're trying to regulate based on principles. And I think these principles should be leading, because principles can always be met by regulators. If you try to regulate, and that's one of the things that I see in Dutch, and that's where I'm from. So in Dutch regulations, you see that we're trying to contain something that is already broken free. So we have regulations that is not even applied. It's still concept regulation, and it's already outdated.
So in a dynamic world, where things are moving fast, we have the regulators looking at digital assets or security tokens and then trying to basically regulate them or have an approach to it based on the existing side of things, or how things are working now. And this is something I've seen within the security token space. Most of the regulators tend to want security tokens to adhere to the existing security regulations as is, and so on. So in this context, and to you, Leon, if digital securities are to be regulated as conventional securities under existing securities law, why do we need security tokens? Are we trying to reinvent the wheel here?
It's an interesting question. I think when you look at the difference between security tokens and or securities or equities as a traditional investment class, security tokens in many instances, whilst it's a very nascent approach, you're looking at digitizing a lot of physical assets. So many of the preliminary projects perhaps in the pipeline are looking at traditional assets like real estate, for example, whereby instead of offering investors something like a REIT, you're looking at an alternative investment product whereby you have fractional ownership that's securitized, and or you're essentially offering it as an alternative product. And that's probably kind of one of the entry points, you could say, in terms of looking at the distinction between traditional equities, traditional securities, and what may be a security token. Now, from a regulatory perspective, you could look at jurisdictions like the United States, where I think we kind of have to put it in two buckets. You have to look at what's guidance and what's statutory law. So if you look at the US, in terms of statutory law, you'd be looking at something like the 1933 Securities Act, which by and large really hasn't been updated from a statutory perspective. If you look at kind of what's happened in terms of how it's developed in case law and how securities are looked at, from that perspective, you're looking at something like the Howey test, where you take kind of a three-pronged approach based upon, is it a security? Does it purport to have some sort of a return on investment? Yeah.
Right. Okay, so fractionalized ownership is a key merit that securities token enable. They enable private markets to be accessible by a global universe of investors. Unlike conventional equity markets, security tokens within the digital asset space can be traded 24/7. So these are various different merits that digital assets or security tokens bring to the investor fraternity. Now, in this context, the role of a digital asset exchange is key, be it a decentralized exchange or a centralized one. And in that regard to you, Abdullah, having a central bank regulated digital asset exchange, how do you see the impact of regulations on that enterprise, on the business, on the sector in general?
Well, that's a great question. First of all, regulations are essential for security token offerings or security STOs. And the main difference is they offer the protection for the consumer and essentially the investor, as well as all stakeholders involved in the STO issuance. And to add to what Leon, the benefit of STOs with regards or compared to traditional equities or securities is they allow cheaper issuance and maybe smaller and medium-sized enterprises to be able to fundraise in a transparent way with the regulators and provide assurance for the investors themselves that this investment instrument is actually regulated and there are protections and thoughts in mind that my money will not be gone or this project is not just run online with a website, and this is the concern that we had with many ICOs, that ICOs were being made in very quickly and rapidly just to get as much money as possible, and that STOs is trying to be the mature, more developed way of that regard, of that technology-enabled change in fundraising and investment. With regards to how an exchange plays a role, the exchange is responsible for providing a marketplace for that instrument, and it's really interesting that slowly the exchanges are considering adding traditional securities back on their platform, and it's allowing, if this were to develop, it will allow companies to, say, crowdfund and then issue STOs through crowdfunding, and then allow a secondary marketplace for these equities, for these medium and small-sized businesses, that they don't have to IPO basically to reach a market. But there are a lot of regulatory concerns with regards to just making sure that the accounting and the due diligence on the companies is at least sufficient enough to maintain the protection for the consumer. So from our side, as an exchange, RAIN, we've been working with the Central Bank of Bahrain for almost 2 years now to finalize the regulatory framework. We initially started by trying to fit in their existing framework, and the Central Bank of Bahrain actually made an effort to create their own framework for crypto asset platform owners or platform operators such as us, in order to provide these services to institutions that want to make these investments in digital assets without having to worry about whether these am I doing is okay by the law or okay by protection, especially for funds that have other people's money involved, or they have a pool of funds, or they are a family fund that need to do everything completely transparently, completely provide some assurances to their partners. A regulated exchange, whether it's for any digital asset, whether it's Bitcoin or other STOs, is really essential.
Nice. So overall, if you see every single comment that we have seen, it's about how the digital asset space can transform how we do things. It can bring about an evolution within the financial sphere overall, and that's the trend of thought, and that's what seems to be what we all agree on. In this context, right, we have technological giants, be it PayPal in the medium of exchange, or Amazon, or Facebook, or any of these tech giants. Now, why aren't we seeing, given the fact that you just mentioned that a key role of the regulator is to protect the small investors, it's the retail investor. So regulators have taken their steps towards those endeavors, or advancing towards that. But why aren't consumer-centric large tech businesses made headlines within this space, be it PayPal or Amazon, or have they? And if so, what it is? And I leave it to the panel. Maybe we can start with you, Abdullah. What have you seen in that space?
Sure. So it's tough to say what these big companies are actually working on behind the scenes, and we've heard stories about Facebook working on their own digital currency, or WhatsApp trying to experiment with their own digital currency, and Google having some research labs on some incentive-based blockchain applications. But this is really a disruptive technology that has yet to provide the incentive for the day-to-day user for these services like WhatsApp or Google or social media. And it will take I think, in my perspective, especially with financial applications, it will take more regulatory clarity before these big, massive corporations venture into these, because it is a risk for any business, big or small, to venture into a business, to fundraise and then begin trying to validate their model and working to reach the market, and then realize that they might not be allowed to sell their services or to reach the market due to some law or rule that they haven't seen or haven't understood. And so, in my perspective, it will take more regulatory clarity and more clarity on the market itself, on what users and people are actually demanding and needing before we see mass use.
Or we can look back at history and wonder, we had the advent of internet and so on, but it was not Royal Mail who went and invented Hotmail. It was two guys and a dog in a garage. Right, so maybe it's just that that's the role of startups, that's the role of new entrants within disruptive technology. And I feel digital asset exchanges are a key thing when it comes to enabling adoption, because they enable price discovery, they enable a centralized space where projects or issuers can come through. In that sense, Leon, if you can help us understand it, what are the different types of digital asset exchanges, and what distinguishes them, and what are their, how do they add value to the ecosystem?
Well, I think first and foremost, I would say that the primary difference is whether you have a regulated or an unregulated exchange at this point. Again, I would go back to the distinction between having guidance in place by a regulator and or a hard backstop in terms of statutory legislation to back onto. So I think at this stage, if you look at, as Bart had mentioned, what FINMA has put out in terms of this 150-page plus guidance, again, it's a very proactive approach, but it's not new law. It's just backing onto existing law. And the same would go for the quote-unquote regulated exchanges in Gibraltar and or Malta. So they're part of the European Union, and as such, whilst countries, much like states in the United States, may pass their own legislation, like you have in New York with the New York BIT license, and certain exchanges there, like Gemini, for example, do have the BIT license, but that's at a state level. And I would kind of juxtapose the US and Europe from that perspective, that in Europe, for example, until you have an EU directive as statutory law from Brussels that ESMA is kind of enforcing, there may be kind of almost a risk even in Gibraltar or Malta, whereby they have their own laws in place. However, clearly European law would supersede any sort of statutory provisions that may conflict with what they may put in place in the future. So when you look at the regulatory landscape from a global perspective, I think that it is very interesting what the ADGM is doing, what the FSRA has developed in terms of having that latitude to really make a sandboxed environment where there's a hard backstop in terms of statutory law rather than just guidance.
Okay, so digital asset exchanges are in an evolutionary phase of development. But why do we need them? If I want to buy a digital asset, be it Bitcoin or any other cryptocurrency to any other digital asset, I can use various platforms. It could be eToro, it could be any other, and I'm not here marketing for eToro, but it could be any one of these platforms, right? In that context, why do we need an exchange? And any one of you can.
If I can jump in here, and I just want to make it clear that there is a primary difference between traditional exchanges that sell CFDs or contracts, or they typically sometimes sell options or forex instruments, than digital asset exchanges, because digital asset exchanges, especially regulated ones, always maintain and carry the underlying asset they have, and they don't practice where, at least most of them, that especially once you're regulated, you don't practice this fractional ownership, or where you sell the underlying asset twice or loan it out when it's deposited with the customer. So the big difference is the investor themselves, once they buy their own asset, they can actually withdraw it from the platform and then maintain ownership or custody themselves, and or send it to another exchange and use it as a global instrument that he can exchange or sell. That's the main difference from my perspective.
Anyone want to add?
Yeah, I would absolutely agree that when you look at the products that are available on eToro or other platforms, I mean, it's challenging to see what the underlying asset is. Whether it's a derivative or a CFD, as Abdullah said, it's completely different than when you buy an asset, particularly on a regulated exchange, where behind the exchange, you know that there are hard backstop requirements imposed upon the exchange by the regulator to maintain certain levels of liquidity for both the clients and for the exchange. Yeah.
So that means basically a digital asset exchange enables it secures your ownership within a framework where you can be more comfortable with, as opposed to a floater or derivative, which enables access to its volatility and the speculative gains associated with it. In that way, so basically what the security tokens or these evolutions that are happening within this industry is going to enable is that it can enable opening up the private markets, and like what you mentioned, be it from a real estate space or any other private asset. It could be a venture capital fund, a private equity fund, or anything that's not traded in a public market can be accessed via the exchange, digital asset exchange, which issues an instrument which enables that access. In that regard, how do you see the absence of any form of constraining taxation, be it capital gains tax or income tax? We don't have any of that in this region.
Not yet.
Yes. And in that context, do you think that this region is well positioned to facilitate the growth of this space relative to another jurisdiction where, for example, if going back to your thing on US and how the regulation works, if you have a fund and if it's a multi-asset fund in the US, the fund has to file a tax return which shows the investor exactly what the return was on commodities, on private equity, on listed equity, and individually we'll have to break it up and give it to the IRS. Now, we don't have any of those requirements, and nobody likes to pay taxes other than, unless you're a different breed. But most people don't. And in that context, do you feel that the lack of those constraining taxation regulations, can this region enable a faster growth within this?
If I can comment on that, well, because in Holland you have to pay taxes, I broke it down a while ago, and it comes out to like 75 cents on the euro. So if you take it all into account, so we have a pretty high rate of taxation, which also includes, of course, any capital gains on cryptocurrency profits or digital asset profits. If I would take into account what taxation is or can be of a burden on the development of whole countries, then I would say it's a definite plus if you do not or keep taxation on a very low level. It also takes into account that what we were talking about earlier is that if you have this new class, asset class, that you can hardly keep track of, that is as going back to the first speaker, Mr. Sultan, a way to a new paradigm, then of course you're going to have trouble locating all these assets. So you would have to reinvent or invent some kind of way of being able to control and track all these assets. And of course we have regulated exchanges that might fulfill such a role. But I believe that there will always be, and that is why this paradigm shift in thinking, this fundamental way in thinking is necessary, I believe, is that there will always be a way to keep private what you want to keep private in this new asset class. So taxes, I wouldn't start taxing too much, and I think it is a plus in development.
So in addition to this region being relatively tax-free, I mean tax-free in terms of capital gains, income tax, and so on, another benefit that I've also observed with international investors when you market the region is the fact that we don't have currency volatility. GCC currencies are pegged, and this takes away a significant risk associated with this region. And even within the emerging market space, the three countries in the GCC are part of the MSCI GCC index, but in many ways, these basket of assets are ring-fenced because we don't have currency risk, we don't have tax implications. So, yeah, I mean, let's keep our fingers crossed that we will be able to pioneer growth within this space. And in that sense, I saw, Sergey, you wanted to say something on...
First of all, taxes are necessary, but the key to success and to adoption and to attraction of the industry here is a clear regulation. I mean, in Russia and in Europe and in Poland, there is no clear regulation, and those people who want to invest, they cannot assess the risk. They will be happy to pay taxes, but they cannot assess the tax risks. So, just main issue is a clear regulation, and that's it.
Yeah, so in that regard, I guess it's worth mentioning ADGM has been one of the pioneers in terms of having spelled out what it means to have a structure on the proposed regulations. And we've also heard from SEA, the Securities and Commodities Authority, that they're working on a platform. We have Bahrain who has implemented, so yeah. So that's one more plus to the GCC region's merit. GCC as a region, if you see, we have an important role within the remittance corridor. And the benefits are obvious when it comes to, are we going to use digital money or any form of digital currency as a transfer of value? Is this going to play a role? I think that's obvious, and I don't want to go into that. But what I want to seek your views on, and again to see how it can impact our region here, is that a lot of the individuals who are expatriates or who have come in for employment purposes, so on, tend to remit their income outside because they feel that if if for some reason they're not going to be a resident no more, it will be difficult for them to access the assets because they will not have the required residency status to be in, to have control of the assets. If security tokens are going to enable ownership and are going to be accessible, because it's a borderless, I don't need to be, I don't need to have, I could have the assets with RAIN, and if I want to transfer it, my options are unlimited. I can go from BTC to Stellar and move on, or if I have a security token, I can go from the security token to BTC and move out. And it's borderless. In that sense, do you feel that the capital that is the capital formation which happens within a segment of the population here, which are currently remitted outside, would security tokens enable for it to be deployed here within the region? Do you feel security tokens or digital assets can help in that regard? I mean, it's open to anyone.
Well, see, the remittance market here is relatively quite optimized on a global scale. You will see that the average for global remittance is much, much higher than the cost of it is of it here in the GCC. And there's some, you know, it's a very easy first use case that people imagine when they talk about digital currencies. Oh, it would be very easy for remittance, but I think there will still need to be some developments in order to actually be competitive in that regard, because you have quite decent rates on remittance today. What's probably going to happen is maybe these exchange houses will use digital currencies for in-house settlement or between other bankers or exchanges, whereas the end user might not be aware that they're actually using digital currency or like Stellar or Ripple or a platform that doesn't use a token, even just a distributed ledger tool in the background. And the one thing I want to mention is that the regulations for buying and selling digital currencies not always uniform with also the regulation with STOs, because with STOs it's you are listing an investment instrument straight from the creators of that, straight from the issuers onto the platform, and that's a big responsibility because you're creating a market, but for a business. And you can think of it as when a company gets listed or they do an IPO, there's very, very heavy due diligence on that company before it goes on and it becomes traded, because delisting it or if the reporting, and for companies to go IPO, it's a very hard, very heavy barrier, and for a company to have their token on an exchange, it's much, much less. But for a regulated exchange, and the regulators themselves, there's still many, many guidelines on what can be listed. And the regulations in Bahrain, they've recently issued the draft regulations just 2 weeks ago. Previously, we were working with this in the sandbox with them, and the draft regulations kind of list some guidelines on what are the requirements for a token to be listed, and one of them requires enough distribution around the world or enough decentralization and a high enough market cap that there is enough liquidity in this asset that can be facilitated, and there is also enough network power that this exchange or movement or transfer of this asset doesn't have any issues. So I think with regards to using remittance, a person that gets on board onto a regulated exchange will do similar, if not more, KYC and compliance requirements to be onboarded onto the digital exchange than using a traditional remittance service. But it is creating the incentive for the exchange houses and the other, even fintech sector in general, to provide remittance services in a more lenient, more digital, more advanced way, because digital currency in general is just disrupting the entire financial
Yeah.
technology
And-
market.
And it's very interesting that you mentioned that some of the developments that are happening within the distributed ledger or blockchain, as it's generally known, it could be in the background and we might not know much about it. And in this regard, an announcement which came yesterday out of HSBC was very interesting. They have settled 250 billion worth of internal FX transaction on the distributed ledger. So interbank, they have moved on to the DLT, and until they made the public announcement, we didn't know it. It's not something that's been hyped up, and that's the evolution that's happening. Last, before we open the audience for questions, and you mentioned the Stellar network, and big fan of Stellar. It's a non-profit and it's a decentralized network, so I can say the merits of this chain. Stellar recently have got from the Sharia Review Board that it's a Sharia compliant network. Now, in that sense, do you feel that the fact that they are, that helps them, their adoption here within the region, will it? Or are these things which will help the adoption by the masses? Anyone?
I mean, I think from if you look at kind of how the ADGM is approaching this, it's not necessarily whether it's Sharia compliant. There's actually quite clear minimum capitalization requirements that are stipulated in order to list one of the digital assets on an exchange. But I think in the future, it certainly could be interesting to look at Sharia compliant products. In the UAE, this would obviously tie into more of the provisions that ESCA is due to release this year, whereby the majority of the Sharia compliant products are more of an onshore approach. But I certainly think that within the region, having more of a Sharia compliant approach in the medium to long term certainly opens the market from the Sharia perspective into digital assets.
Great. Any questions from the audience? I mean, yeah. Yes, can someone...
Hi, Saeed Al-Darmaki from Alphabet Fund. I've got a question for Abdullah. When do you expect the Bahraini Central Bank to approve RAIN exchange? And is there any timeline that's been advised?
Well, we've already been kind of through all the procedures. The weight is really on them to review their draft regulations. So the process was you join a sandbox environment, and we were the first to apply to the sandbox environment because we approached the central bank before their sandbox existed. And then they invited us many months later that, hey, we have this program where you enroll in a sandbox and you operate, you serve customers, and that's what we are, but privately, just invite only. And then once they have a framework for us to graduate into, then we're allowed to serve the public. And so the past year, the CBB has been drafting their regulations, and when they're complete, then we can graduate from the sandbox phase to get an actual license that is embedded in their rules, or embedded in their regulations. And so they've just launched publicized the draft regulations, which means they've put the regulations to the public so that stakeholders can contribute and add their comments about some parts of the regulations. And then we are hoping in a few weeks they will actually come out with the full regulations. It depends on their review. But sometime this year, probably this quarter, or if not the beginning of the second one, we should be public, inshallah.
And we received in 2007 a remittance license to explicitly use blockchain to onboard people into our remittance process. But one of the things I'm noticing as we're expanding, what are the key things going into creation of Sandbox? I think the point being made, like Singapore, like what the gentleman just said, how do we get more these jurisdictions to look at sandboxing as a limited way to introduce this technology that allows for the startup or the company as well as the regulator in the market to kind of understand? And then as it relates to Europe, the whole blockchain island with Malta, is that something that's a expanding phenomena? Or I've had people, and I didn't know this being from the States, that Malta has always been known for kind of different financial activities. Do you see sandboxes being developed, or are they already ongoing in Europe?
Well, when it comes to sandboxing, I think that almost every company knows all about it, right? But if you talk, when I talk to legislators, not the companies that execute rules, but policymakers, i.e. politicians, it's pretty rough trying to explain what sandboxing is as a concept, let alone saying you should implement this and try to make sure that you give companies access to sandboxing prior to legislative actions, making sure that you, the legislator, and the company can figure out what's best for both the legislator and the company. So that's actually what our foundation is all about. We try to inform and educate legislators on how to create a blockchain-friendly ecosystem. Being a former politician myself, I know that these people all doing their best. They could really use some kind of education on blockchain technology, but also on concepts revolving around the blockchain technology space. When it comes to Malta and the rest of Europe in a legislative form, as Leon said earlier, I think Europe will come with some sort of rules. I think some of the countries that are really ahead of the curve when it comes to legislative or policy making in regards to blockchain technology will struggle. But I do believe that when enough policymakers are confronted with what I said earlier about how this technology is already ahead of what we are trying to implement right now. So the rules are already too old, and they're not even on the books yet. So I believe that these countries, if they proceed and really try to show other countries and legislators what works, that will ultimately create the ecosystem that Europe desperately needs, because the whole world is moving ahead, and we're kind of dragging or lagging behind, I feel.
I know your focus was on the European side of things, but if I may add to that, if you look at the region here, so be it Bahrain, ADGM, DIFC, so DFSA, so they all have the sandboxing. So the FinTech Hive here in DIFC, the ADGM has its equivalent, and Bahrain has...
Actually, even Saudi Arabia,
Yeah.
central bank has their own sandbox, and
Yeah.
it's a good example. There, a lot of regulators look at the US or the Europe
Yeah.
from this region to see what has worked there and how do you experiment and find out how to build regulations. Regulations are not easy when you think about the long-term side effects to all stakeholders, but there should always be an initiative. And the sandbox environment allows both the regulators to discover things that maybe the business did not see, and then also the business to discover things that they have not seen themselves in order to serve the market. And I think the model is following the UK or the FCA, and the sandbox regulatory test framework, or say, is becoming a trend in the GCC and also the world, because it's working.
I think I might just add that perhaps one advantage, and perhaps Bart could speak to this being a former politician, is that within the ADGM or the DIFC, there's no parliament or there's no Congress, so to speak, with elective representatives who may or may not change statutory provisions from term to term. So it's really a clearly defined approach. And I think the members, the exchanges, the participants within the ecosystem can really take comfort that once those statutory provisions have been put in place, there's not the same level of exposure that you may have in other more mature jurisdictions like Europe or the US, or in fact the UK, where perhaps a member of parliament or a member of Congress may raise a bill which may enact statutory legislation which may turn the guidance that the regulator has put out completely on its head, which could be seen in a nascent industry as a very large risk.
Yeah. Thank you. Thanks.